Hello, everybody. We're going to go ahead and talk about my Robinhood portfolio today. Going to give an update on it, just give an overview of what I have going on. I plan on doing this probably once every month at least, just to give you a refresher, see what's going on. One thing you might notice is there haven't been that many changes. I've been making a lot more deposits onto my M1 finance portfolio because I want that to be my main portfolio over time. And it soon will surpass this one, but right now this is my highest value portfolio, so it's the one to talk about. I'll still be playing around with this one and seeing what it has to offer because I really like the strategy I have going on with this one. It's a little bit different from what I have going on my M1 portfolio. I will preface this also by saying I am having my wisdom teeth removed tomorrow, so as of the day this is posted. So I will not be probably as active this week in terms of uploads, but we will see. I will try to grind on through it, and I will do what I can. I will definitely be getting out plenty of earnings videos this week if I can, as long as it allows me to. So let's go ahead and get started on this. Obviously, you see right now right under the $15,000 mark on this portfolio. Pretty excited. At one point, we did reach $18,000 on this portfolio. Pretty cool. But overall, we're up 9.92% or $1,300. So I'll take that for sure. This is a portfolio started in July 28th of 2017. So to see these positive numbers is still fine with me with how much the market's really been hit. You see there's going to be an ugly scar forever on my chart, no doubt, as well as everyone's chart for the most part. But let's get into these stocks, see what I have, so you can get an idea. So first up, we have top of the list, obviously, is going to be Apple. So Apple is a position I've had for pretty much ever. One main thing I want to mention about this portfolio too is thanks to Robinhood activating or allowing me to use dividend reinvestment, that's how a lot of these positions will start growing actually in the future. So dividend reinvestment is going to be a major part of my Robinhood future. If you talk about these stocks like Apple, in which my average cost of this is $168.08, I don't necessarily want to buy full shares at this dollar amount. But if it's just dividend reinvestment, I'm perfectly okay with that because it won't hurt my dollar cost average too much. So some of my larger positions I'll probably hold off on buying shares and end up going just for this dividend reinvestment. But yeah, as you see here, 5 shares, equity value of $1,500, total return of $712, which is up 84.82% on this position. Pretty nice. It's definitely one of my best positions. And it's one that I like to hold around 10% on my portfolio of. So around 10% on my portfolio I would like to be in Apple. That's the first position there. Second on this list here is going to be Disney. Disney, as you can see, is definitely one that I've also had since the infancy of this portfolio. Not much action going on with this. Dollar cost average of 99 at 25. I do like to add shares under that amount, so if I get under that amount, I've been very tempted to add shares. So I'll talk about anything I plan on adding shares to in this, and Disney is one that I'd be perfectly okay with adding some shares. Obviously, their dividend has been withheld for the second or their first half dividend has been, so I'll be more than happy to pick up some Disney shares if I get these around $90. I will certainly be picking some up, but so far up 10.4% or $72.39. Nothing massive on this one, around 5% of my portfolio. Yeah, nothing too crazy with that. Next up, we have the next big player, which is Facebook. Dollar cost average of $165.29. Makes up around 12.87% of my portfolio, so definitely a big portion. I like to keep this hovering around the 10% of my portfolio as well because it's a stock I really believe in. Total return on this of 28.4% or $423 in the green. Very nice. Next we have, that's right, another big one, Microsoft. Definitely one of my best positions I have on here, no doubt. Right now you'll notice I have 4.32 shares, and that is because I purchased partial shares on this aspect. So my dollar cost average is $92.07. I bought $50 worth of share, which equated to 0.32 at the time. So I had 4 shares previously, but I didn't want to necessarily put in a full share at this point when my dollar cost average is so low. I still really like Microsoft at these valuations because it's a company that's fantastic. But this is around 5% of my portfolio, 5.39. I'm up 100% on this one, or $400. So I've doubled my money on this stock so far, and I plan on holding it and just letting it ride out. Then we have Cloudera. I have mine kind of separated into different sectors. So right now we're in a tech-ish sector. We have Cloudera. After here is a newer position for me. Dollar cost average of $7.90 on this one, 15 shares. A little bit less than 1% of my portfolio. Not a massive position. Up not 8.9%, or $10.55. I'd like to add a lot more to this one. I do like this company quite a bit for the long term. I picked up obviously in the $7.99 range, somewhere in April. It'll show me real quick on the history. So I picked up most of this in March, actually, I should say, March 11th, which obviously was prior to them even going down even further. And I should have picked up more back then, but I didn't. So what are the worst things that can happen? But if I go underneath this cost basis of $7.90, or if it hovers around $8, I'll definitely consider buying some more Cloudera. It's a company I do like as far as long-term prospects. Next, we have ABV, 71.55 for the dollar cost average of this. Right now, 84 a share. So a total return of $17.89, which is $51 up. Around 2% of my portfolio, 2.27. Nothing crazy on this, but obviously it's a company I really like. Hold for dividends. They pay a really nice dividend, and just a really nice company. And I can't wait to add shares from that dividend as well. Next, we have Gillette Sciences, as I call them. It's Gilead, I know, but I'm saying Gillette. That's what I always say. Okay, you can't stop me. I pronounce it how I want to, even though it's Gilead. But 3 shares at $70.33, 1.5% of my portfolio. I'm 10% up on this one, or $21.26. Nothing major. Again, one that I'll enjoy getting a dividend on, and hopefully getting some shares paid out to me through dividend in the future. So a company I'm a huge fan of. They have a lot going on for them right now. So after Gilead, you have Ford, which has been on a tear as of late. Dollar cost average is definitely not pretty. It's definitely one of my worst positions. Portfolio diversity around 2%. 60 shares at $9.76. Ugly. Total loss right now, 46%, or $271 down. Now with dividends, it helps that a little bit. Because it's a company I've held since 2017, so I've earned quite a bit of dividend on this company. Just it definitely does not outweigh the loss I've faced. So not my proudest stock for sure, by any means. After Ford, we've got New York Community Bank, which my dollar cost average on this is $11.50. I have 20 shares at right around 1.35% of the portfolio, down 13%, or $30.01. If you look at the history on this thing, I probably have not made up that $30 in dividend, but it's a good dividend paying company. I'm fine with holding it. It's the very first financial stock I actually own on this portfolio, so it's got a little bit of a sweet spot for me, so I'm holding on to it and enjoying it. We have Target at 4.5 shares pretty much. This is another one that I put $50 in because I was up so high on my position. I didn't necessarily feel like putting in enough for a full share, so I just was testing the fractional shares thing out. 3.5% of my portfolio, dollar cost average of $73, which is really nice because that means a total return here of 59.7%, or $197 up. So Target has been a surprise successor for me, and I'm very happy about it. And I think the future will be good too. I look forward to the dividend adding partial shares. Kohl's is one that I've been adding to a decent bit lately. Nothing too major on this company, all things considered. 5 shares only. I've been adding a lot more on my M1 portfolio, but 5 shares. I'm definitely looking to add more to this. It's only 0.62% of my portfolio. Just an ugly performer right now, at 94 $4 down, or 50% negative, 50.85% in the red on this stock. Not good. Obviously, it's a sector that's been hit harder than most by this whole nightmare situation we have going on. This crisis has been hitting these clothing retailers a little bit more than others. So next we have another clothing company, Tapestry, which has also been hit hard. One that I was up pretty big on for a while, and then it obviously shot down since then because of everything going on. 15 shares at $19.54 per share. Diversity of 1.5%. Total return is down 23.74%, or equates to $69 in the red. But yeah, Tapestry is one that I'm fine with for now. I don't know. I'll probably add more in the coming months if it stays around this, below my cost average in the next couple months. But just for now, I don't know if I'm necessarily ready because of all of these retailers that are going to be expecting to report bankruptcy soon, like JCPenney. I don't know if I want to get caught in the crossfire because the stock's probably going to go down more. These retailers are. Next, we have another newer position in Stitch Fix. 8 shares at $15.36 per share. Around 1% of my portfolio. Total return of $21 in the green, or 17%. Definitely, I like Stitch Fix quite a bit. Steaks to benefit quite a bit from this, and if it comes down again to the 15 range, I will certainly be buying some more Stitch Fix. It was more of a speculative stock for me, so nothing too crazy, but I think they'll do well for me in the long term. Next, we have Home Depot, one I've had also since pretty much the dawn of this portfolio. $158.50 per share on this. One share, 1.5% of my portfolio. Total return of 47%, or $75.95. So pretty nice in terms of Home Depot. Wish I obviously had some more shares, but this is back when there was no partial shares, and buying a $150 stock was an expensive thing for me. It was more of a big deal back then. Next we have Coca-Cola. Cost basis of $45.24 in this company. 5 shares, 1.5% of my portfolio. Up 2% on this company, or $4.60. One I've earned a decent bit in terms of dividend in the past too, as you can see, right around $2 per share every 3 months. We'll take that. Pretty nice. So the dividends that pay nice, and again, dividend will be pretty much investing most of the money from here on out. It'll be dividend reinvested right into the company again, so I can just make more every quarter. After Coca-Cola, we have a position I wish I had added more onto. If we're talking about back in March, I wanted to add more onto because it dipped underneath my cost average of $52.25. 1% of my portfolio at 2 shares only. 49% on this, or $51. So that's even up pretty big after such a big drop that we saw. So one I would like to get into more, but it's just at the highs that they're at right now in this current economy, I just don't know if I can justify it. So dividend reinvestment it is. Next we have Irobot, which is going to be $46.91 per share on the cost basis. 8 shares, right around 3.5% of their portfolio. I am up 37%, or $141.95 on this one. Definitely a position I've been super happy about. It's a company that's getting hit kind of hard lately as far as profits are concerned, but I think I really like Irobot for the future. If you think about automation and just how lazy we're going to get as a society, so I think it's going to be good. Next we have Micron Technologies, MU. Cost basis of $45.19. I've had this one for quite a while too. Don't know when I want to sell. I mean, I'm looking for these to exit probably around the $60 mark. It's such a cyclical stock, and you can really see that in 5 years. I mean, it's been up and down for a little while, but I do think it's something that could easily get to 60 here, like it did back in 2018, and I didn't sell out then because I like the company. So if I could get this thing to 70, I would probably sell out. But 10 shares of this at $45.19, 3.2% of my portfolio. Total return of 7%, or $31.95. Nothing massive in terms of that. After them, we have Cisco, 3% 0.025 shares. Nothing crazy on that. That's a dividend reinvestment there, as you see. Cost basis of $36.98, less than 1% of my portfolio, but I'm up 16% on this, or $18.69. Yeah, if I'm below cost basis on Cisco ever, I'll probably see about adding more. I'm not opposed to it by any means. I like Cisco. Decent holding. Next we have Garmin. Again, just another boring one share. 0.5% of my portfolio at $79.74 a share. Up 2% or $1.60. Garmin's nothing massive. It's one I bought to track an options contract I was pursuing. And I just ended up holding the share just because Garmin's a fine company. Wearables are a big segment, and I think Garmin does a fine job. Next we have Analog Devices, ADI, cost basis of $79.05. One share on this one only, 0.75% of the portfolio, but I am up 38.94% or $30. So I wish I had more of these back when they were cheaper shares, but you can only do so much. Following that we have HP, boring holding for me. Cost basis of $19.07. 5 shares, 0.5% of the portfolio, down 17.6 or $16.86. Not a great holding. Just gonna be one that I hold for a while, and just for the dividend sake. Next we have one that I wish I had more of, because I always have it on my stocks to buy list, but I always seem to forget to buy it. Cost basis of $56.78 on Activision Blizzard, right around 1% of the portfolio, a little bit more than 2 shares, just because of the fact of a dividend reinvestment. So up 28% on this, or $32.62, which I had more. And if I can get it anywhere around the $60 range, I will be looking to add more. But we will see if that's even plausible. Following that, we have TD Ameritrade. Cost basis of $33.07, 4 shares at $1, at 1% of the portfolio, up 14.5% or $19.28. I'm okay with TD Ameritrade. Decent holding. One I wish I had more of when I had picked up the position, but I bought it all at once and it worked super well for me for a little bit. I didn't sell out, and then it kind of fell down a little bit. But next is Realty Income, one that I love. 20.09 shares on this one at $54.41, 7.4% of the portfolio. Pretty well flat on this one, around 1% up. But the main story for this one is the dividend, as you see from the history here. The history is just lovely on this one. It's a monthly dividend company, just making me money every single month, as you see. Love to see it. And now it's going to be reinvesting all those dividends, so I love it. In a year I'll equate the equivalent of a share, which just means more and more money coming, and I'll look to invest more just as a whole. Next is Iron Mountain, one I certainly look to be adding quite a bit more into over the maybe next week or the week following. I wish I had previously, because we saw a massive shot up of 13% based off an earnings call that was pretty nice. Cost basis of $33.81, 25.64 shares on this one, or 27% down, or $236 down. Not what I like to see, but again, it's a lovely dividend payer, right around 12% yield. You see $15.46 per share. They just announced the dividend's not going to be hurt by this that much. They're cutting costs, and profitability is great. So I can pretty much get half a share, more than half a share with dividend reinvestment right now. So I'll stick to that for just a little bit, but I'll probably try to pick up some more shares, because it's a company I really like, and I really believe in their management team. Next is OHI, Omega Healthcare Investors. 28.03 is my cost basis. 20 shares at 3.7% of the portfolio, down 1.89% or $10.59. The story again with this one is going to be the dividend, and once they start getting me the ability to get some partial shares, which I would love. As you see, I have a pending transaction on the 15th of $13.40. That's right, that's half a share coming towards me. Very nice yield on this company of right around 10%. I mean, I love this company, and they're doing well through all of this, all things considered. Following them, we have ABR, 65 shares on this one, around 3.34% of the portfolio, $7.93 cost basis, total return of down 3.74 or $19 down, but that $19 I've certainly made back in dividend throughout the history, and through dividends here every quarter, I should be able to get a lovely couple shares actually included, because you see I'm getting $16.50 per share. They just announced that this dividend will continue the next quarter. They'll be paying another dividend out here in June, which is going to be $16.50 for me as well. Actually, it'll be higher now that I purchased these extra 5 shares too. Just saying, that'll be quite a bit higher than the $16.50, because this is going to be based off of 30 cents. At 55 shares, I have 65 shares now at 30 cents, so I'll be making more. It'll be a nice little reinvestment going on with this company. I really like what's going on with this company. Very good dividend payer. Good management team as well. Following ABR, we've got APLE, Apple Hospitality, which right now isn't currently paying a dividend, but I certainly hope that they get back to it pretty soon. But they are a hospitality company, therefore you think about hotels. 60 shares, cost basis of $14.73, 3.7% of the portfolio, down 37% on this one because hotels have been hit hard, or down $334. So previously they're a monthly dividend payer as well, 10 cents per share. I recently added 10 shares to this, so should be getting $6 a month on this one. Hopefully they can return to paying that dividend within the next coming months. After them, we have ARI, Apollo Commercial Realty. Nearly 21 shares on this one, cost basis of $14.72, down 46% or $143.39. Also a massive dividend payer at a 20% yield. Crazy. And you see this dividend just popping on this company. Just a very nice dividend on this company that I like to see. And hopefully we can keep reinvesting with that. So following them, we've got NRZ. NRZ is a company that I have a cost base of $12.71 on, 15 shares, not much of my portfolio, 0.6, down 48% or $92. Another massive yielder as well. Currently, they dropped the yield significantly, so I'm only getting 5 cents a share, but previously they were paying just massive dividends, and I didn't get to partake in those, unfortunately, but they were yielding over 12% before this. They lowered it to remain liquid during this, and I completely understand it because they're a mortgage-based company and, not a good market to be in right now. So I'm glad they're still paying a dividend. Then we have Psec, Prospect Capital. If we can get it to load here, yep, $6.38 per share is my cost basis, 25.37 shares, down 36.6%. Or $59. Another nice dividend payer on this one as well. Getting paid pretty nice as far as monthly is concerned. You see the history. You get monthly dividends on this company as well. So nice upcoming dividend I should expect in the next 2 weeks. So I like to see that. And that one's going to be pretty much focused on dividend reinvestment as well. It's going to be nice to see those things grow, even mostly just off dividend reinvestment. Following Psec, we have some ETFs, which we're not really going to look into because cost basis isn't that important. SPHD, which is a low volatility, high dividend fund. SPYG, which is the growth fund. SPYD, which is another dividend fund. KBYD, or WD, I should say, is a financials dividend fund, and KBWY is a real estate dividend fund. So definitely ones that I've recently added to, but they're going to pay a nice dividend, and reinvest will be very nice on these too because KBWD and KBWY pay monthly. Then we have DIV as well, which is another super dividend fund. DES is another dividend fund, believe it or not. And then SNSR is the Internet of Things fund, which nothing going on there really, just one share of that, nothing massive, but Then we have InBev right after that. Back into the normal equity stocks. $4.76 per share on this one. 70 shares, 0.79% of the portfolio. I look to add, I'm going to be adding 30 shares onto this week. If I'm cognizant tomorrow during trading hours, right? If I'm not passed out from whatever they're going to give me, whatever medicines they're giving me to knock me out, I'll be buying 30 more shares of this and lowering my cost basis. 64% down. It's my worst performer by far, or $215 down. But I look to be adding quite a bit more onto that one, so very excited for that. Then we have GLMD, another awful performer for me. This might be worse, potentially. Garmin Pharmaceuticals, cost basis of $9.40, 15 shares, 0.4% of the portfolio, down $75 or 53%, just ugly. Not really that much money invested in that, so I don't worry too much about it. So I just have it on the off chance it pops, because you never know with those biotech stocks. You just never know. Then we have Neo. 100 shares of this company. I really wish I had more. At 207, 2.5% of the portfolio. Total return of 82% on this company, or $170. So very nice. Really happy with Neo, how they've performed through all this, and I think they're going to perform super well in the future. Could think about picking up some more shares as well. I did skip one. I'll come back to it. We have Blink Charging, though. $2.32 on average for this. 50 shares, 0.5% of the portfolio, down 29% or $33. Nothing massive. I would look to add to another 50 shares of this company too, if plausible. I'll take a look at that. I'll be putting some money into this portfolio come tomorrow or Tuesday. If we get another market dip, I'll be looking at it. Then we have Plug Power, one I wish I had some more shares of as well. $2.02 or 21 cents per share. 30 shares, around 1% of the portfolio. Up 105% on this, or $69. Yeah, it's a stock that's performed well, and I think it'll continue to perform well in the future. And then finally, my last one is a boring one in CPRX, or Catalyst Pharmaceuticals. Cost basis of $5.28, 10 shares, down 8% or $4.28. So that's my portfolio for you. Really hope you enjoyed. We look to keep adding on to more of this, and if you have ideas for me, please let me know. Anything you'd like to see, I can go more in depth and explain the reasoning behind these stocks. Just let me know.